What are community banks and why are they important? To start with, let us look at who needs a bank. Individuals and businesses do. They need it for a place to put their savings. They need it to write checks. Banks provide credit and debit cards and also provide loans. Why does a person need a bank? It's a place to keep their savings. Savings for everyday expenses and things you want to buy or do, such as going on vacation. Needs for your family, education, medical needs, starting a business, or for retirement. It is used to pay bills using a check. It is used when buying a house and you need to borrow money and pay it back monthly over many years. This is called a mortgage. You can use a bank loan to buy a car. Banks also provide credit and debit cards to individuals. Why does a business need a bank? A business needs money on a daily basis. This is called working capital. It needs a savings account to make money it receives from customers, a checking account to pay expenses such as employees, suppliers, utilities, and advertising. They have credit card needs for taking credit card payments from customers and to pay expenses for the business. Then there are short-term cash flow needs. This is when a business has to pay for something but does not have the cash on hand but will shortly. For example, a builder is starting a new project, which will be completed in 6 months. The purchase of building supplies is needed to start the project. Additional people also have to be hired. The builder does not have enough money on hand to pay for these expenses, but will have more than enough money by the end of the project. This money coming into the company and out for expenses is called cash flow. To meet short-term cash flow needs, businesses can establish a loan account with a bank called a line of credit. This allows the company to borrow money for short periods of time to meet cash flow needs and then pay it back as the business receives money. The builder uses the line of credit to help pay for the supplies and additional workers. As the builder gets paid for the project, the loan from the line of credit is paid back. A business may also have long-term loan needs, which will be paid back over years to pay for things, such as equipment or a truck, purchase or modify a building, or purchase computer software. There are different types of banks. The central bank is the country's bank that oversees the monetary system. In the United States, it is called the Federal Reserve System. It consists of 12 Federal Reserve banks and 24 branches. Reserve banks serve banks and the U.S. Treasury. These banks are often called a banker's bank. They are used for storing currency and coin, processing checks, and electronic payments. Commercial banks are banks that focus on business customers. Investment banks focus on complex business transactions, such as helping a business sell stock in its company on a stock exchange, or help merge two companies into one. The last one we will look at are retail banks, which provides banking services to both individuals and businesses. Retail banks can be divided into the categories of national and regional chains with branches around its areas. These are banks such as Chase, Bank of America, and SunTrust. Community banks have a limited number of banking locations which serve a smaller geographic area, such as a city or county. Ponce Bank is a community bank that serves New York City. So why would an individual or business select a smaller community bank over a larger national or regional chain bank? To start with, since the community bank's focus is on the community, it will have a better understanding of the needs of the community. It is easier to develop a relationship with the local banker. The bank's success is tied to the community it serves. If the community does better, so will the bank. For the community to do better, it needs businesses to grow, be profitable, and create jobs. The community bank is there to support the development and growth of businesses. For the community to develop, it needs to have quality and affordable housing and home ownership. To provide these services quickly to the community, the bank has the ability to make decisions locally. Finally, the community bank keeps the money in the community. Let us take a look at an example. Mr. and Mrs. Smith have one child and live in the community of Anytown, USA, and bank with the local community bank. They have a savings account to save for their child's education, vacations, and to grow their wealth, a checking account to pay their monthly bills. They also have a credit and debit card for shopping, a mortgage on the house they bought 5 years ago. and a loan for a car they purchased last year. They also own a business, Smith Home Remodeling, and use the same community bank for their business needs. This includes a savings account to keep their daily working capital, a checking account to pay bills, and a credit card transaction account to accept payments from customers, along with credit cards for the business, a line of credit to purchase building supplies needed during a renovation, and to pay electricians, plumbers, and carpenters. They also worked with the bank to meet their long-term financial needs when purchasing a warehouse and 2 trucks. This is a win-win-win situation for the Smith family, community, and the bank. The Smiths have a bank that understands their needs and is helping them in both their personal and business life. The community is seeing businesses and individuals grow and prosper. The bank is growing because the community, businesses, and individuals are prospering. Being a community banker is a career you might want to consider if you want to help businesses grow, individuals have the financial tools to meet their dreams, and your community prosper.